don't know what you're doing. Again, it's just important to spend a lot of time understanding what you are investing in. For me personally, I'm not excited about it. I don't wake up in the morning and say, I can't just tell you what to buy. Isaac cannot just say, hey, buy this. No.
Hello and welcome to Streetwise Economics Market Commentary. I'm so excited to have my guest once again, Blooming Umoren. Thank you so much for gracing us with your presence here, Blooming.
Mm-hmm. Happy to be here.
Fantastic. I think the guests now, they know who you are. Maybe for those who don't know, you may want to just tell us who you are and what you do.
Okay, so Blooming Umoren, most people call me Blooming, my trusted money coach. I love to teach about stock and crypto market investing. Simply put, I just teach you how to make your money work for you. And I'm a Tesla bull, so
You
all you
must
need
be
to know for
smiling.
now. Yes,
So,
like,
yeah, no, that's
yeah.
fantastic. So, in terms of today's program, we are going to discuss, what's happening in the market, and we'll bring to you live what's really happening in the market, particularly in the US stock markets. And we
Mhm.
will comment a little bit about the Bank of Canada that reduced interest rates and what that means for, different stakeholders, borrowers, investors, institutions. And then do an overview of economic data for this week and next week, what to expect next week. And interestingly, we will dissect Tesla earnings review. I know we have a Tesla bull here, so let's get started. So I just want to start off by sharing the screen here of what's happening in the market, but you can see here what's happening in the market. Right on the chart here, I have these particular securities that I'm trading. It seems like today the S&P 500 is 0.25% in the green up, and then the Nasdaq is 1% up. The Dow Jones is 0.43 down, and these are normal market fluctuations in my view. Market goes up and it goes down. But what is interesting, what you can see on the screen is the volatility index here. Let me just say the VIX, actually the VIX itself. This measures is more like the gauge fear. What this means is that there's a lot of heightened volatility and fear. People are curious, maybe in the Middle East is Friday, something might happen over the weekend. So what this does is, as the fear increases, it also increases the volatility in the market. And you can see Tesla is unstoppable. Right now, it's apparently it's almost 3% up. Yesterday, it went up 20% after reporting fantastic earnings, and we'll talk more about that. And yeah, I think that's what I can say. Coach, do you wanna comment anything about what's currently happening in the market now?
Yeah, so as we can see, like even just starting this week, we can see that the major indices, the Dow, the Nasdaq, the S&P 500, it's been a little bit shaky this week. But again, this is leading up to the US election. And again, I don't also want to ignore the geopolitical tension that is still going on around the world. So even in our last market commentary, I did mention that I do expect a strong Q4. But irrespective of that, I still expect some volatility in the market, given all these uncertainties in the market. Usually, investors will need some level of certainty in the market for us to know, okay, I want to deploy some capital. But
Mhm.
some of the things that we're seeing here, as we're seeing with the VIX, that yeah, there's still a lot of uncertainties in the market that we just want some certainty on who will be in the White House November 5th, or I mean early next year. So it's just again, perspective of the direction of the market. I just believe that as a long-term investor, it's important to know how to play the game. And this is something that I've also learned from you, Isaac, that
Mhm.
even as a long-term investor, we can also edge our portfolio by using the VIX, ETFs, and these are just opportunities for that we can take advantage of, meaning that whether the market goes up or down, we can always take advantage of this. Even as we saw with the interest rate cut, the first one that we had in the US was a
Yeah,
jumbo cut, 50 basis point.
yeah.
We saw a similar one here in Canada too, another 50 basis point, even though Canada we've had a couple of 25 basis point cut. But again, all of this is just signaling to me that yes, well, anytime we have cuts like this, again, investors tend to take on more risk.
Mhm.
But even with that, I will still be very, very, very cautious because anything can happen. Nobody predicted August 5th. Nobody knew that that was going to happen with the yen carry trade. There's always something that is going to happen. So, in as much as I'm very bullish and very optimistic on how Q4 is going to wrap up, I'm still edging my portfolio. So, that's my take on this.
That's a very good point. And yesterday, you can see here, this is the Nasdaq. You can see that here it reached an all-time high. You can see here. So what this means is that there's no supply curve that supplies on that side. And what that usually means for me as an investor is that usually, as you have seen here, and I shared this in our WhatsApp group with some fellow traders, that there's no supply curve here. So usually when stocks hit all-time high, they usually retrace back because people tend to take some profits, right? You can
Yes.
see here when it was overbought, right? Uh, Oversold here, right?
Mm.
It's
So good.
overbought. It's overbought here and it's oversold here
Mm-hmm.
on this. So when it was overbought, people were buying, 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 and then people tend to sell and to take the profit. So it's like breathe in, breathe out. But what is interesting about the Nasdaq, which is the tech-heavy indices, and you see most of the technology stocks they are listed at the Nasdaq, it tends to pull back. And you can see here that we have a retracement level here, like we have a demand zone here, right? You can see here you can see that we also had a demand zone here. So these are potential levels that this can retrace to, but nobody really knows, right?
Right.
So you can see it came at this point, it went up, it came, it's going up. Boom. So what this means is that for me as an investor, I am not adding shares on the highs. I only add when it drops, like at these points, right? These
Right.
retracement levels. It goes up, it comes, I add some shares if I want to add on this position through the indices. So I just wanted to highlight that each time that I see the stocks going, hitting all-time high, like you said, I become very cautious. So
Mm-hmm.
some other people, what they do, they play bonds because
Mm-hmm.
usually they do tend to have an inverse relationship. So what then happens is that if the equities market drops, then the bond market, some bonds, then they go
Right.
up. Some people go fixed income. That means if you have a maturity of, let's say, 5%, it means you are guaranteed to get that 5% if you buy, let's say, the Canadian treasury bills or US treasury bills. What that does is it kind of like brings stability when you as an investor, because you don't want to be as a someone who is retired and let's say the market drops by 40-50%. It's very possible, it has happened in the past, right?
Right.
So what that means is at that point your portfolio is like down. It has a huge drawdown. 50%, that means if you had a million, it's $500,000. So if you are selling at that point, I would be investing or buying more of the things
Right.
that I understand, only the things that I understand. But if I have a hedged portfolio, that means if I have the VIX, if I have gold ETF, if I had fixed income, if I had cash, then I'm deploying my capital at that point. So
Right.
that's the issue with investing. Investing, you really have to manage your emotions. So at any given time, that's why I also want to have some cash in the portfolio to add some shares as it goes. But interestingly, I also trade a bit of that and make profits sometimes. And trading is also risky. You don't, like only 10% of traders from the statistics that I've seen are really profitable. So I just wanted to give that, overview of the US market. And as an investor, this is not investment advice. We have always said this on this platform. You really have to do your homework, right?
Yeah.
Even if you see something in the news, use your judgment. It's not a bad idea to consult financial advisors, even though they charge fees, sometimes 4%, 2%. But at the end of the day, what you want is you want protect your capital and hopefully, grow the capital.
Yeah.
Now, um, moving on, if you don't have anything to comment, I think probably let's do a deep dive into the Tesla earnings, and then we can then look at the economic data, because the way that I trade for my trading head is that I use technical analysis, like what I was showing you, and then I use fundamental analysis, the news, economic data, the macroeconomic picture, you know, and those are the things that can really move the market. So as a trader, I like volatility, right? And let's say, for example, I bought shares for SPY at this level, right? 370. Okay, this is, let me just do for a day, right? And what this means is that if I bought, let's say, I bought shares here at the market open at 581, and let's say I sold at 584, right? That's a $4 gross profit. Let's say if you have 100 shares. So that's 400. That's a good return. So in a couple of minutes. But this requires a lot of understanding of what's really going on. And I talk about this on on my trading course. And also Coach Blooming teaches you how to invest wisely, because you really have to be smart about it. Sometimes, even though you think you are smart, you can also possibly lose money. That's when understanding when to get in and cutting your losses comes
Right.
in. So now, do you wanna probably
Yeah.
share
Yeah. Even
yeah, sure. The
yeah,
Tesla
even
chart as you
before
prefer.
yes, even before we go into Tesla, I think you did mention a very, very important point that it's important to understand what you are investing in.
Yeah.
It's important to be educated. The reason why you're able to look at the chart and understand what is going on is because you spent enormous time understanding the fundamentals and even the technical analysis of this. I've met people that they complain that, oh, I got into the stock and this is the worst stock I've ever bought. But they won't explain that they didn't understand the stock. Or number two, they just saw somebody randomly on the internet telling them, hey, buy the stock without truly understanding the fundamentals or even what the business does. In as much as investing or even trading can be exciting, it's only exciting when you know what you are doing. If you don't know what you're doing, you're going to lose money. It's just a given. If you don't know what you're doing, again, it's just important to spend a lot of time understanding what you are investing in. And again, it doesn't hurt to pay for knowledge. That's what most people don't realize. It's because I've met individuals, they'll reach out to me, hey, Blooming, I want to invest in this. I have $50,000. I want to do this. What should I buy? And things like that. And anytime things like that happen, it's important to just know that I can't just tell you what to buy. Isaac cannot just say, hey, buy this. No,
Yeah.
we need to understand the type of investor that you are. And apart from that, we don't give advice, financial advice. No, we can only show you that, hey, this is what I'm doing. I can teach you this is what I'm doing. But apart from that, it's so, so crucial. Understand what you are doing. If you don't understand, seek out for practitioners, seek out those that are already investing or even trading profitably and just learn. Again,
Yeah.
that's just it's so so important before I then go and I share, some of
Yeah,
my
you can share
personal
that, and
stuff.
I'll add, I get emails, people saying, oh, tell me this and what's going on. And the moment you say, can you schedule a consultation? Because I am spending time, sometimes I pay for the, like softwares that I use. Is, oh, okay, they don't want to pay, right? But the thing is, like, that's why a lot of people lose money, because you really have to understand your time
Right.
horizon. Even for us, what we do is we just teach you, you want to understand valuation, like what we are going to show you here. So Tesla reported their earnings, and the
Mm-hmm.
stock if you go on 5 days, you can see that it rose like 20% yesterday, basically. And do you want to explain why it,
Yeah.
rose, and, the major highlights when the
Mm-hmm.
earnings were reported yesterday?
Yeah.
And if you
So
have a chart, you can also show us the chart for.
yeah.
Mm,
So again, whatever we're going to be discussing here, nothing here is financial advice or investment advice. We're just
yeah.
sharing with you what we're doing personally. And full disclosure, yes, I own a lot of Tesla. I mean, I won't say a lot of Tesla shares, but it's a sizable portion of my portfolio. So what happened Q3 2024 earnings call? It was a remarkable call. And I'm going to show you some of the highlights of what was said on the call. So I think I'm going to start off by just going through the financials. Number one, I think, no, not this one.
Yeah.
Let's start from here. So we saw that if, again, this is just a summary of what happened. Okay. So total automotive revenue, we can see that in Q3 2024, year over year, it increased by 2%. Again, we need to understand that there's been a lot, it's been a very restrictive macro environment. What do I
Yes.
mean? It means that interest rate has been through the roof. And usually when people buy cars, they usually finance it. So somebody that would typically maybe get maybe a 3% or a 4% on a car, now they have to pay 7%, 8%, or even higher than that.
Yeah.
So it makes the car very unaffordable for people to be able to even buy. So again, this is just looking the year over year growth. It's been a very restrictive environment, but yet Tesla was able to grow. But even apart from that, if we look at the energy generation and storage revenue, this is up 52% year over year. The same thing for other revenue. It's up 29%. But that's not only the interesting part. If we look at the total GP, that's gross profit, it's up 20%,
Hmm.
right? But the even more interesting thing is the operating revenue is down 6%. And one of the things that Tesla really did this earnings cycle is that they've been able to bring down
Cost
the
of goods.
COGS.
Yeah.
Yes. So if we look at the historical record, like the cost of producing models.
And what does that mean for an
So
ordinary investor?
okay, so I'll just use a simple item, okay? Let's say you are a producer of widgets, okay? And it costs you $5 to produce it in 2020, and you sell it for $10, right? So that means that your profit is $5. Let's say 2 years later, instead of the same widget costing you $5 to make, now it's costing you $3. And if you're still able to sell it for $10, that means your profit is now $7. Again, what we're seeing from this chart is that the cost of goods, so that is the cost, the amount that it costs you to make that product,
Yeah.
is been declining for Tesla. If we look at it in 2020 Q1, it was at 41,000 to make a Model 3 or Y, but 2024 Q3 is now down to 31, almost 32,000.
Yeah.
Again, even though Tesla has been reducing the revenue, but they were still able to reduce the cost of producing the item. So this has been a very, very good tailwind in the sense that, again, people love this. It just shows how efficient Tesla has been in just driving down the cost. And apart from that, I think one of the things that we also saw
Hmm.
during this Q3 is the energy gross margin. Again, it's important to not just look at a quarter. It's always important to look at a trend for you to know what the story is truly, really saying. So here we can see that the energy gross margin, again, it's going up, and this is what we want to see over time. And this is the same thing that we were able to see here, that, oh, year over year, the revenue has grown up 52%. But
Hmm.
even apart from that, let's jump to the free cash flow, which is one of the important things that I like to look at. We can see year over year is up 223%. Again, these are just really, really strong numbers. And if I remember, I think the street was expecting EPS, as earnings per share, to be around 58 cents. Tesla came in at 72 cents, which
Hmm.
is really, really good. Again,
Yeah.
this is just in this quarter.
Yeah.
It's been, I mean, the past, as a Tesla investor, the past 2 years, I can say has been one of the most challenging years to be an investor.
Hmm.
Because again, when you see other stocks or other companies, they're doing really, really well, and you're stuck with this thing called Tesla, you're like, oh my
Yeah.
God, did I make the right call?
Yeah.
But again, if you truly understand that, number one, the macro environment has been very, very restrictive, which is a
Yeah.
headwind for Tesla. But now with J Powell reducing the interest rate, I mean, when I say J Powell, that's Jerome Powell, and even, or should I just say the Fed? They're reducing the interest rate. Even
Mhm.
here in Canada, we're seeing the same thing. We're seeing that the Bank of Canada has been cutting interest rate. We just saw a recent one, which was a jumbo cut,
Yeah.
50 basis point. Again,
Mhm.
these are just catalysts. This is just series of events that are going to propel, I'm not saying that this is going to propel Tesla to the stratosphere. No, that's not what I'm saying. I'm just saying that these are things that are just going to work in Tesla's favor.
Yeah.
Again, even
So,
apart from that,
mhm.
okay, yeah, even apart
You
from
can
that,
stop share. You can stop sharing if you are done,
I
and then you
still have
can.
this
Okay.
one here.
Okay.
Even apart from that, we've seen a lot of Wall Street analysts because when we had the 1010 event, again, the next day, Tesla stock dropped like,
Yeah.
I mean, maybe another 10% or
Yeah.
thereabout. And for me personally, I was just buying because I'm like, oh, this is a no-brainer. You released
So
the
so
robot tax.
you made money at least
Well,
unrealized
I won't say that I just bought. Okay.
unrealized profit. Yeah.
But I also want to really highlight that anytime there is a discrepancy, meaning that a lot of people don't understand the value of a company, the company is still undervalued, and you believe in the company, but provided you understand what you're doing. Because I think Elon said this in 2 or 3 earnings call earlier that if you don't believe that Tesla is going to solve autonomy, then it's better you don't even invest in the Tesla stock. No, don't even invest in it because again, that is really one of the driving forces. That is one of the things that Tesla is really creating. In the last earning call, one of the questions was like, "Oh, is Tesla going to produce a $25,000 you know, taxi or robot taxi. And
Mhm.
I mean, there's no point having a car that has a steering wheel because we're going into a future that we don't even need to drive. That is the future that we're going into. And I remember one of the I mean I'm just going to paraphrase this Steve Jobs that sometimes you need to create a product that even the consumers don't know that they need the product yet. So again, I'm just sharing that this is just something that in my opinion, anytime Tesla stock gives me the opportunity, I will just keep buying.
Yeah.
So this is
So
my take on this.
yeah, this is fantastic, and you can stop sharing. But I wanted
Mm-hmm.
to kind of like make a comment there. For me, I'm exposed to Tesla through ETFs, but the thing is, um, what's happening is that it's trading at over 70 times earnings, right? And then if you look at General Motors, Ford, they are almost like 5, 6 times earnings, which I think is reasonable. But of course, these are different, they have different models. And what happens is that Tesla,
Mm-hmm.
97% of its revenue as a business, it comes from selling cars. So it's a car company, right? Even though there's AI aspect and all this, that value has not been unlocked yet. So for me, I'm a little bit uncomfortable to
Mm-hmm.
be buying the stock when it's at 70 times earnings. Right, that's my concern, and also the issue that I highlighted last time to say, look, Elon, the founder, the CEO, because when I'm investing in a business, I want to know the leadership, the top
Yes,
leadership. And
yes.
he is a genius, no doubt about that. But then his alignment with, into
Other
politics,
candidates,
yeah,
yes.
is it not also going to align or misalign with other potential customers, maybe on the other side, right?
Right,
But if he wins, probably the business is going to get more coverage, more prominence, right?
right.
But the cost benefits, I think for
Yes.
me, I'm a little bit uncomfortable with that.
So here is my take on this. Anytime I hear somebody say that Tesla is a car company,
Hmm.
I tend to just say that it's easy for somebody to say that Amazon is a bookstore. Is it true that Amazon sells book? Yes. That's not the overall picture. That's not the big picture. Because
Hmm.
why? When again, I love to look at history, and even though I believe that history doesn't always repeat itself, but
Hmm.
it leaves clue, it leaves some things that we can also look back into.
Hmm.
For example, if you say that Tesla is just a car company,
No, no,
and it
I
is,
said it gets 97% of its revenue. So that
yes,
is the core business. So that does not summarily say, but that's the data, right?
so
So to
okay,
then say it's an AI company, right? It's different from Nvidia because what is the revenue, percentage of the revenue that is coming from artificial intelligence. So that is my basis. But I'm not saying they don't have the
yeah,
data because they have software, they have all this, that, and they can leverage on that. Okay.
right.
Just wanted to clear that out. Yeah.
So like okay, so if we look at how Tesla has been
Yeah.
operating, yes, it has an automotive sector, but that's not the only sector. The fact that you can create a vehicle that can autonomously, we're talking about full self-driving. That is not I can't think of any other car manufacturer or automaker that is creating an autonomous
I think in China there are
driving.
a lot of them actually. But the thing is, they are hybrid. But also, thankfully,
No, I
if
mean
Mhm.
purely electric, not hybrid, purely electric,
I think
meaning
that
that
they are there, but not as many.
I mean purely electric and they are profitable. There is a difference between making a car
Hmm.
that is you're just doing it just because oh you want to knock out this competition. Tesla 2023, the
Yeah, yeah.
Model Y was the best-selling car globally, not just in the US, not just in Canada. This is painting a picture that a lot of people cannot see yet. You might see that, oh, maybe a lot of revenue is still being generated by the automotive sector. But again, when I invest, I don't invest for today. I invest for tomorrow. I invest for what is this company doing today? What is the capex? What are some of the investment that they are doing today that is going to set them up for success tomorrow? For example, if we look at the Tesla superchargers, you want to tell me that a lot of automakers they've adopted this or they are still in the process of adopting it. Is it that they cannot create their own superchargers or their own stations? But Tesla, in hindsight, they've created an infrastructure. Are they perfect? No, Tesla is not yet perfect, and I don't even expect perfection yet. But if I were to compare Tesla with any other automaker, for example, I don't
Yeah,
even need to.
no doubt it's a leader. But what I'm saying though, Blooming, is that when you were sharing the forecast
Richard,
and all this they are assuming that certain targets are going to be hit, and again I'm underlining that it's trading at over 70 times earnings. So what's going to happen if they miss any of those, or there's something, it might tumble by a
again,
big percentage. But
let's
I'm not saying they are not going to hit all those targets. But what I'm saying is, for me, when I'm buying or investing, I look at, the potential. Mostly I invest because a lot of people, they just look at the upside, right? Then the downside for me is that, it's trading at, say, over 70 times earnings. As far as I understand Tesla, maybe I might be missing something like you're explaining. About 98% or so of their
mhm.
current revenue is generated from automobile sector, right?
So
It's not an
so
AI business, even though they have the capacity to have all these services that can bring in income streams. It hasn't
yeah,
yet, brought in that. And like you like to say, opportunities and money can be made if you rightly figure it out, and then it turns out to be correct. But
again,
inversely, if it
yeah,
doesn't turn out the way
correct,
so what I'm just saying to investors and everyone is that investing is not gray and white. It's not black and white. There are
yeah,
those nuances, but if you correctly figure it out. But for me, the way that I do about it, I just don't want to invest more than 5% in one stock, regardless of how confident. And that's me. Investing is personal, right? Most of
And
my money is invested through exchange traded funds. I'm comfortable that way, and I
that
hedge
is
my portfolio. And if I can get maybe 20%, I'm comfortable with that. Some people can make 50%, 100%. But the true measure of a good investment manager or portfolio manager is that when the market drops by 50, 70%, how much will your portfolio drop? Right? Most of
yes,
the time, a lot of people will be wiped out in case those who may be on margin calls, margin accounts, and stuff. So I'm just a conservative, and that's me. I'm not saying that's the only way. It works
again.
for me, and I'm not saying that's the only way to do it, right? Yeah.
Yes. So again, this is, I mean, the point that you brought out that yes, you have to look at the downside. But for me, I'm such a long-term investor that even
Mhm.
when, for example, Tesla drops 50%, 60%, I've been in those positions the past 2.5 years. Tesla has been down. But what
Mhm.
have I been doing? I've been buying because why? I've spent a lot of time understanding the
Mhm.
business. A lot of people, when you don't spend time understanding something, it's easy for you not to truly see the vision. For me, I've seen the vision. I understand this. This is like a no-brainer.
But do you
But it doesn't
agree? Do you
matter.
agree? Sorry to
It
interject.
doesn't
But
matter.
do you agree that you can still spend time, a lot of time, and you
I
can
still
still
be
be wrong?
wrong.
That's the
Yes,
point.
it's possible,
Mm.
but
But
I'm not going to be comfortable just
yes,
investing in the S&P 500. That
definitely.
is just me as a person. But it doesn't mean that
Yes.
people that invest in an index fund or in QQQ,
Yeah.
it doesn't matter.
Yeah.
Just like I'm an investor, I love to take risks
Yeah.
and I am comfortable with this. A lot of
Mhm.
people will not be comfortable with this. For example, if we look at Tesla compared to the S&P 500, 3 months, yes, the S&P 500 Tesla, okay, there's
Mhm.
6 months. The S&P 500 is 14% up. Tesla is 59. Year to date, the S&P 500 is 23.69 and Tesla is just 12. Let's look at 1 year. 1 year, the S&P 500 is up 40%, and
Yeah.
Tesla is still
You,
just
you know,
30.
let me make a
But
comment there, but sorry to interject. So
yeah,
I want to push back a little bit. So when you are dealing with this data, I think it's important to normalize the data because Tesla has started. This company was publicly listed much later than the S&P, like S&P. So you
yes.
have to take that into account and stuff like that. So to
Again,
compare
I'm
the
just looking
yeah
at it 1 year. If I
yes
put
yeah
10,000 into this company 1 year ago, where am I going to be? Or if I put
yeah
it in the S&P
yeah
500, if
yeah
I look at the same thing 5 years ago,
yeah.
again, it doesn't like somebody will be comfortable investing in the S&P 500, and there is absolutely nothing wrong with that. And if somebody chooses to invest in Tesla, Nvidia, I mean Apple,
Can you compare with
Costco,
Nvidia instead of the S&P 500? On Tesla, you X that.
yes. So let's go back here and
I
just
think you can exit that. You see the X there, like at the
also
bottom.
this one.
Yeah, and then you can then
Then
compare
I'll do compare, then I'll just
and
put
then
Nvidia.
Nvidia. Yeah, I think that for
So
me that would be a
Nvidia.
better comparison, right?
So again, we have to just understand that this is something that the individual investor is comfortable with. Let's look at the comparison. 3 months, Nvidia is up 27%. If Tesla is down 0.43. 6 months, Nvidia 61, Tesla 59. Year to date, Tesla is only 12, Nvidia is almost 200%. Year to date, Tesla is only 29%, Nvidia is 250. 5 years, Tesla is 1,179, Nvidia is 2,007. And don't forget, Nvidia just had a major run. So again, if I were to compare this with the S&P 500, some people are comfortable just going all in on Nvidia, and there is nothing. It's just doing whatever you're comfortable with.
Definitely, yeah,
Yeah.
definitely, yeah.
Once you understand what, because majority of people they're like, oh, I want to invest in the S&P 500, but if you're investing that, you've already told yourself, I've already capped my upside and also my downside. But for me, I'm like, I don't care about this. If I'm able to research and be comfortable and be convinced,
Yeah.
the enormous time that I spend just knowing about what is going on with Tesla, understanding what is going on in the business. I can't compare myself with somebody that doesn't spend this ungodly time understanding the business of Tesla.
Yeah.
Again, in investing, it's so important to just understand that this is what you're comfortable investing in. If you're Because if we look at the past 2 years, let's just look at Tesla alone. The past, okay, let's go back to just Tesla. The past two years, it's been ridiculously hard, like really, really hard. Let's look at it from here. Like imagine now, let's even somebody started investing in 2021 at 258 to 303,
Yeah.
303,
Yeah.
and
Yeah.
today Tesla is down.
Yeah. The thing,
So
the thing, the thing blooming
yeah,
is that I totally agree with what you said. The thing is, like, I mean, when we look back in the past, it looks very easy. For you, you started investing early. So, but for someone, we may be starting now at two skis or something. There are
if
potential risks, right? So I think,
there are potential risks,
yes.
if
And
only if you don't know what you're doing. If you're a
yes.
long-term investor, meaning that because a lot of people get fixated on just one single price, meaning that they enter a stock at maybe this 267 and they expect it to go to 300 or 350 and it does not, and it goes back to 198 and they don't buy at 198. Me,
Mhm.
I buy at 280, it goes down to 140, 144, 160. I'm still buying. That is because I am so convinced. If I'm not convinced, my research, the research that I do,
And you
it
just
gives me the
shared, yeah,
confidence.
and you just
Yeah,
shared some numbers. Maybe we should move on to the next item. But the thing is, you are researching and you are just showing us year on year, growth and
yeah,
all this, right? And it's not speculative. It's something that
it's
is based
not.
on data. And I totally agree with you. And again, the other point is that it depends on individual preferences. Maybe you
Yes.
can wrap up and then we can go on economic data.
So,
I know
okay,
we
so
can
yeah,
talk
I know
and talk more, right?
Tesla can be
But that's fine.
just saying is that Tesla, the Tesla as a company, or even Elon's leadership, especially now that he's getting politically inclined to one candidate. Again, as I said in the previous market commentary, this can be very dicey. I mean, because again, the election can go either way, and this can
You
have
can stop
a
sharing.
negative effect. Okay, yeah,
Yeah,
and this can have a negative effect on on Tesla stock. But again, I just choose that, okay, this is what I want to invest in. I'm comfortable with this. I believe in the leadership of Elon. I believe in the team. And again, it's just something that I find that I'm convinced about it, and it won't work for everybody. It's just
definitely.
important to just understand the dynamics of that this might not work for everybody. But Tesla, again, I'm a Tesla bull, so I'm definitely biased about this. But I do appreciate the conversation that, yeah, this can be a risky bet for a lot of people, but I'm just comfortable with this. So that's just my
That
own personal
that
take on
that's
this.
that's the purpose why we have these conversations, and we are by no means not perfect, right? So
Yes.
I think moving on to the other aspects, like in terms of the economic data, because these are some of the things that cause fluctuation in the market day by
Yep.
day. So this week there was a very interesting development in Canada. The Bank of Canada reduced the interest, I think, by 50 basis points,
Yep.
from 4.25% to 3.75%. And what this means is it's cheaper to borrow for those who
Mm-hmm.
own houses and those who are on variable interest, you
Yep.
know, and existing home sales in the US, they came lower than expected, and
Mm.
then initial jobless claim. So basically, there was positive news, except that the manufacturing sector, as measured by the S&P Global US Manufacturing PMI, it contracted, the manufacturing
Mm.
sector. What this means is that the manufacturing sector, if the reading is less than 5.50.0, there was a
It's a
contraction.
contraction,
But the
yes.
service sector expanded. But again, I think the biggest risk factor in the US, in my view, is the election, right? I
Election,
think a lot
yeah.
of fund managers, they are waiting to deploy their
They're
money.
waiting, yeah.
Yes,
Anything can happen. Like
yes,
seriously.
yes. And next week is gonna be a lot of data. And you
Hmm.
see, this when it has three stars, it means it can make the market really
Market,
volatile.
yes.
So there's a lot of inflation related data, you can see here. But for me, my take is that at the end of the day, like you said, Blooming, as
Hmm.
an investor, you wanna expect, it's not gonna be a smooth ride, in my view, right?
Yes,
The markets go up, they go down. What you wanna do, what I'm doing myself is that I wanna keep a bit of cash, stay invested in the equities market, and also have some part of the portfolio hedged. Even
hedged,
having
yeah.
cash is a hedge in a way.
Yes.
In my case, I trade it occasionally so that,
Hmm.
get rid of
Arbitrage.
the inflation.
Yes.
Like inflation is a silent test. So that's what I see. So for next week in the US, we expect a lot of volatility. What's your comment? What do you see?
Again, the more we get closer to November 5th, the crazier things can become. November 5th is the US election day, okay? So
Yeah.
things can go crazy, even though, yes, we're all praying for a peaceful election, but again, anything can happen. And as an investor or as a smart investor, what we can do, just hedge your portfolio if you can, if you know how to, like, go ahead and hedge your portfolio. That is what I am doing. That is what I just feel it's just a smart way to do to just take advantage of the market volatility as we're going to be going into November. But even apart from that, as always, I expect a strong Q4 given all the tailwind that we're seeing with the interest rate cuts and things like that. So these are positive catalysts that I believe is going to propel the market. But don't take my word for it. This can go either way. My man, anything can happen in the market. I'm just a naturally optimistic person that things are going to go well. But hey, market always find a way to spook itself. So
You
I
know,
just
yes, I found it interesting because the other time, I see people who share, and I'm not saying it's bad, the gains and stuff. But what I've said that sometimes people are not transparent to share
losses.
their losses because at the end of the day, again and again, very few people can beat the S&P 500. But most of the time I go on social media, I see, good returns. But that's good. I mean, if people are making money. And another
Yeah.
thing is the market doesn't care about you. It doesn't have
Yes.
feelings. It doesn't have emotions. We are tying bits in the bigger
Yes.
scheme of things. There are trillions that,
Yes.
exchange hands through the market in the US. And I read an article by Bloomberg that they will be even opening longer hours to cater for
Yeah,
other
22
people.
hours. I saw
Yes.
it. I saw it this morning. So I was like, really? I mean, the normal trading hours will still be there, but the New York Stock Exchange, I was like, really? 22 hours? Are you trying to copy crypto? Because crypto is 24/7.
Yes, you
So,
can you can make it or lose money anytime.
oh my God, we're not going to be sleeping. Like, seriously. So if you
Yeah,
can trade
yeah,
22 hours, I
yeah.
mean, oh my God, that's a no-brainer. Like, I don't know if that happens. I think it's great.
That's
It
that's
shouldn't be
interesting.
restricted. Yeah, it
Yeah,
shouldn't be restricted. But
yeah.
what do I know? Yeah, is because I mean, crypto is 24/7. So why don't we
The
make the stock
futures
market
futures
too?
also have, almost about that time they just stop for a
Yeah.
little bit. So it's a big industry, trillions,
Yes. Yes.
exchange hands, yeah, every time. So I think with
Yes.
that, if you wanna make your concluding remarks, Coach
Concluding.
Blooming,
So
um,
it's just again the market. I think I said this in the previous market commentary that the stock market is one of the greatest wealth generating tools. If you understand how to play the game of money, it's just it's just a no-brainer. The reason why I'm saying this is because a lot of people work very hard, but they don't know how to make their money work even much harder for them. And the stock market is one of the major tools that we can use to generate wealth over time. So my call is this. if you're not sure on how to invest, reach out to Isaac, reach out to me. This is what we live, breathe, and just research every day. We argue about it. We're like, no, this is what I'm doing. No, this is, it just makes everything fun because why? We keep learning every day. That's the beauty of everything. I mean, the news about the New York Stock Exchange with the extended hours, it just came out today, and we already know about it.
Yeah.
We
And
already-
I wanted to also say this to viewers, Blooming and I, sometimes we have kind of like heated but respectful engagement. But the
Yeah.
thing is, we care about each other to say,
Yes.
I'm honest with her, she's honest with me, and she's like, you know what, buddy? I think here you are taking too much risk. Have you thought about this? So that's what we do. And in that process, I think, it's our friendship is stronger because we are honest and transparent. And
Yes.
I wouldn't feel good about it if I see, something that I think can be a potential risk and just keep quiet about it. But anyway, thank you so much for tuning in at
Thank you.
Streetwise Economics. I'm so excited that we get to do these things, and hopefully next week there's gonna be exciting times. I'm sure there
Exciting
will be
news.
something. The market
Welcome.
always has something, right?
Yes.
So you have a
Anyways,
wonderful time. Trade and invest wisely, and may the markets be on your side. Bye bye for now.
bye bye.